What's going on, EGA Tribe? Welcome back to another Everyday Growth Advisors Breakdown. Welcome back to the EGA channel, where we plan to trade and trade the plan. We had a rather interesting market event today. We came down exactly to where we wanted to be, and it was expected, right? We spoke about this in the previous video, and so let's break down this market for you so you don't have to do it yourself, right? Very quickly, once again, before we continue, if you can drop a like, please, guys. It is truly so important for you to drop a like on this video, because the YouTube algorithm will not share it with other people if you don't. And if you haven't yet, make sure you leave a subscribe if you want to follow us for more breakdowns and daily market updates. So we had another day with mainly the markets moving in the directions that we wanted. It is important at this point. I think this is probably the most important daily brief of this week, which I'm going to lay out the foundations for what's going to come up in the next few weeks. So this is going to be the last daily brief for the week, and this one will be the most important one for the next few weeks, in my opinion. Okay, so I'm going to break down everything as much as I can, just to get it straight out from yesterday's price action, semiconductors, financial, and energy. Those are the three sectors that mostly held steady. We saw some capital flow out of technology and industrials yesterday. And meme stocks, they corrected sharply, while equities in general saw a fall in inflows due to the dollar index that was climbing higher. Okay, so a lot of things happened at the same time. We got mostly a lot of the corrections and stuff that we needed, and I'll get through the technicals in just a second. Let's go through a daily brief first so we can break things down correctly. So the market in the short run, you need to understand, is a voting machine. So it'll vote on what speculations are on the table, right? But in the long run, remember, as Benjamin Graham says, it's a voting machine. Sorry, a weighing machine. In the short run, it's a voting machine. In the long run, it's a weighing machine, okay? And the most important thing in these markets is that it prices in information before it happens, right? 6 to 8 months before something happens in the market starts to price it in. So what are we trying to price in now? What is this market trying to say by sending us slightly more downward, etc., right? Well, here's what the markets are thinking, and I'm going to lay it out for you guys, so there are multiple scenarios here. The first thing, markets are pricing in a strong recovery of the U.S. economy, okay? What? What do you mean, T? The market's moving downward. How does that pricing in the strong recovery of the U.S. economy? Because many of these things are counterintuitive. You need to understand this. When we look at cause and effect, you need to understand something. If the U.S. market or the U.S. economy recovers quickly, there are going to be a couple of things that will happen at the same time, right? We will see the market correct further down or trade sideways until we get more data and the Fed decides what to do with interest rates, right? But here's a couple of things. Market participants are already expecting interest rates to be tapered earlier than usual, okay? So meaning to say they're expecting interest rates to go up earlier than usual, okay? And they're pretty much calling the bluff of the Fed in trying to do so, because the Fed said we're going to be only doing it when we see inflation above 2% for a prolonged number of period, and they said that inflation is transitory. The market's saying, wait, hold on. I think that this is going to become a bigger problem. You might need to start tapering interest rates earlier. We're calling your bluff on this. So that's what the market's doing. They're pricing in what the Fed is saying, oh, this is going to happen. They're saying, oh, no, we think otherwise. Okay, so the market's starting to price that in. Now, this is not, excuse me, this is not all bad news. We need to understand that. Because in the short run, we will get a correction. But that is great. Because once the market gets over pricing in this inflation or pricing in these raises in interest rates, then we'll see the next bull run that will be even stronger than before. But expect that correction for this next correction to be, between the nominal range of 5 to 10%, right? Which is a nominal pullback on the uptrend. Obviously, we don't have such a strong uptrend right now, but you understand what I'm saying, right? And inflation is good for certain stocks, but overall, it leads to higher discount rates. What does that mean? The valuations on which we build companies are calculated, and we use discount rates to get them. And if we increase these discount rates, then what happens is these valuations of these companies come down. And you can imagine that companies that are more risky, which are your tech names, which are primarily on the ARK ETFs, for example, those tend to come down even harder than the others, right? So what are examples of some of these stocks, right? Tesla is one of them, right? You have like your Roku, you have your Fastly, and all of these other companies that have risen so quickly in the past, and now they're all being discounted majorly because they're higher risk beta stocks. So when we increase the discount rate, these beta stocks, they will lower in value very quickly, okay? Because they're not producing positive cash flow. You need to understand that, right? Company like Tesla or you know, a company that's not producing positive free cash flow consistently and has a chance of not performing consistently will get discounted by the market first. That's what's going to happen. Companies with solid balance sheets like Microsoft and your Apple and your Amazon and your you know, all the big tech mainly, those will continue to outperform the market, okay? And I have mentioned this in the previous videos as well. Another thing that you need to understand is this provides short-term depression in prices, but long-term opportunities. So if you are an investor looking at a long horizon, this dip shouldn't matter to you. So it's all about perspective sometimes. You need to keep your perspective tight, okay? And also another thing you need to take note of is technology stocks themselves are actually deflationary, right? They're deflationary. They're not inflationary because technology stocks do, what do? They reduce the buying power for consumers, okay? And why does this happen? Because technology creates automation. Automation creates labor demand that goes down, right? When you automate your business, what happens? You have to furlough people, right? And when labor demand goes down, then wages go down. And if wages go down, what does that do? That lowers the price of things because people can pay less for things. That forces the demand down and supply down with it. Prices come down, okay? So the whole curve moves to the left, okay? So this in turn leads to lower buying power for consumers, and that's deflationary, okay? So when we talk about inflationary, we say the opposite, right? Everything's going up, 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 up. But technology stocks are actually deflationary. They make things come down, back to earth, okay? So that's another thing to take note of. Now, SPY and QQQ, they remain range bound, but they quickly took a rug pull on the last trading session, and we called this out perfectly. I'm about to show you the charts right now. So let's get into the technicals real quick, and I will break it down without a frown. And let's peel this onion. All right, so let's have a look at SPY first, right? Now, looking at this, forming a nice little inverted cup here. Now, obviously, I'm extrapolating things and assuming things. This is completely not going to happen, but I'm just saying this would be an interesting scenario, okay? We came down perfectly to the 416 level, which is what we covered on the previous video, right? I said 416, 417, that is the level that which we will bounce, right? Why? This was the short hunt target, right? I was mentioning how market makers will possibly come to push this down to hit stop losses that are all trading below here before we buy back up. Now, it's easy to say that, oh, we're going to go bullish after this, but we can't tell for sure, okay? Because this is a curved top now. Now, this could possibly come down to 414, 413 before we actually find a base and then move to the upside again, all right? What's important is we hold 416 and we hold 414, 413. This is important for SPY right now, okay, from the technical perspective. Now, if for some reason, extended hours, we rally back up and then we start testing this channel, and I'm telling you, it's probably not going to happen, but this will be interesting if it happens. This is just like, I'm seeing a cup, so I'm making it into an inverted cup and handle, which is probably not going to happen, but it's fun to draw these things out and, you know, see if it pans out. This would be interesting, right? If that happens, then we'll see range-bound trading all the way up to 424, 426, which would kind of make sense, okay? It would kind of make sense. But what's more important is I was looking at a certain correlation between the dollar index and SPY, okay? So let's have a look very quickly at the dollar index, and then I'm going to come back to NASDAQ to complete the NASDAQ technical. So dollar index, let's look at this, okay? The last time that the dollar index rallied, it was actually in March and April of 2021, okay? Just a couple months back, right? And this lines up perfectly when we had a deeper correction in the SPY ETF. You can see it right here, right? In March and April, right? We had a pretty much similar looking correction. Look at what happened, right? we had a kind of a WW, right? We came back up, right? Look at exactly where it was. It's pretty much this right here, okay? So we're talking about this period right here, okay? We came off a rally, and then we kind of did a forced bottom to test the trend line, and then we kind of consolidated for a little bit, and then we ripped to the upside, okay? I'm not saying this will happen again, but I'm saying, looks pretty similar right now, right? Forced kind of bottom, rally, consolidation. Okay, maybe it might happen. We don't know. These are just things I'm pointing out for you guys from the technical perspective. Remember, technicals and then looking at the macro side is completely different, okay? But I like to give you all angles so that you can make a decision on your own, right? So, for my case personally, today, and personally, I'm not going to be trading today, just so you guys know. I'm staying out of the market today. Why? It doesn't make sense for me to do so, right? With Fed Jerome Powell talking, and then unemployment numbers coming out, it's not going to be a very conducive day to trade. I'd rather wait for the news, see what the market does, pick a direction, and then go with it after that. If you ask me, I think that this bounce right here was pretty bullish. And remember what we have been talking about for the past 2 days. We've been talking about market makers are going to instill fear. And that they did. Remember what happens. The moment that we hit a key level, everybody on YouTube, everybody on Instagram, everybody on the news outlets, they're going to tell you, oh, we're going to go and crash and die, and this is the end of the world, right? Because it's so much easier to predict the bear market than it is to predict what's going to happen next, right? With the bull market. So, for me, whenever I see more and more people get bearish, that's when I say, all right, it's time to go bullish, right? And I'm seeing that happen now. I'm seeing a lot of people becoming bearish. And when people get more increasingly bearish, that's when market makers pull the rug to the other side and they kick things up a notch to the bull side, okay? So this was a pretty bullish recovery yesterday, but we can't be so sure just yet, okay? We will see how the price action goes. Remember, we are not prophets. We can't predict what's going to happen, all right? So I'm just going to put that out there and let you guys be the judge of it, all right? Next up, QQQ. I'm only going to cover these things today. SPY, QQQ, dollar index, and VIX. No time for ticker breakdowns today. We'll do tickers in the next week. So look at the QQQ here. Now, this could be a pennant, a bullish pennant, okay? And we came into the 329 level, which was once again, the perfect region. Now, the Qs are in a slightly different position from SPY. SPY looks more bullish than the Qs do. If you ask me, the Qs can still come down and line up perfectly with this bottom channel and go spill over a little bit exuberant style, right, into 326 and 327, right, which is right above this dual zone right here, and that would make sense, okay? So if you were to ask me, like, okay, this level got kind of broken today, where's the next one? This is the next level right here, 326.39 or above it, right, somewhere there. This is where we would expect the next bounce on QQQ. So this is the level to hold today. Now, if for some reason we gap up, then hallelujah, right? I'm of the world where I don't even want to take puts at this point because I don't have a confirmation for a bear thesis. I'm just going to hold on and wait till this market decides what's going to happen, because there's no point in trying to speculate what's going to happen right now, right? You just wait for what the price action tells you and do things according to that, okay? So this all lines up with the dollar index rallying, right? Remember what happens with dollar. When the dollar goes up, what happens? Purchasing power erodes. If you are buying things in dollar and suddenly the thing that you're using to buy things goes up in price, then you can buy less of what you were buying. That's one of the reasons why equities were pulling back yesterday, okay? Now, if you realize the dollar index has been in a long downtrend, this could be a wave up, right? It could be a wave up on the way down, okay? It could be. I'm not saying it's not a reversal, but the other thing is this is also a demand zone, okay? So there's two things happening here. This could be a reversal, or this could be a continued wave up on a continued downtrend, all right? And I would expect it to at least come up to 91.50, right? Which is the previous resistance, to try and test that at least, right? So we'll see what happens. We'll see what happens, okay? Now with the VIX here, we tested the $18 perfectly, right? This is another one we put as a target, right, for VIX. $18, we tested that perfectly while we were down here. Remember, we were here a couple of days back, and I told you guys the VIX has slid too quickly, too fast. We need a pullback, right? And so the pullback on the VIX happened, and now it depends on whether the VIX wants to make higher highs and consolidate above $18, or it wants to break below 16 and continue its downward descent. If it breaks below 16, continues a downward descent, that's bullish for SPY. If it goes higher, breaks above 18 and consolidates above 18, that's bearish for SPY. everything is going to be based off what this news comes out today. All right. And more importantly, there is other news that will be coming out this week. Sorry, not this week, this month. On June 10th, which is in the next week, right? On June 10th, next Thursday, we have May CPI data, right? Inflation numbers. Then on June 16th, we have a FOMC meeting the week after, okay? And then on that same week where FOMC meeting is happening is quad witching week. We have 4 different types of financial instruments whose expiries will be all expiring in the same week, okay? So in conclusion, there is a lot of uncertainty. And when a lot of uncertainty happens in the market's unable to make a decision. All right? It's unable to make a decision. I've told you, it's like a keyhole that needs to be turned when the grooves are all perfectly lined up. You don't get rallies just on indecision. You need all green lights, right? Okay, Fed policy is on track. This is on track. Everything else is on track. Equities are on track. We're doing well. Then the market rallies. If something's amiss, the market says, but, there's a but. So keep your bullish stance in your deep pockets. Hold on to this because it might be a bumpy ride for a little while, right? And this bumpy ride could last for more than this week and the week after and the week after. It could go on for mid-July mid-June and into the end of June, okay? So hang on. I'll give you more updates as I see more economic news coming out, and I'll give you the next daily update. I might try to make a video for you guys tomorrow to go over a couple of things, which will be the economic numbers and maybe what Powell says. If you guys want me to make a video tomorrow and you lasted all the way through this to the end, drop a comment and tell me you want to see a video tomorrow, and I'll make it. If I get more than 20 comments, I'll make the video tomorrow. How about that? Fair? And I gotta see at least like 40 likes. Come on, guys. You can help me out, right? In the meantime, have a great week. Happy trading. Stay out on today, if anything. I personally don't see a reason why you should trade. It's okay to stay out for one day, all right? And then come back in on Monday and enjoy yourself with the newfound information. Have a great day, guys, and I'll see you guys soon. Take care. Peace out.